Okay, so continuing on, I'm calling this the advanced basic accounting equation. It's really not that much more advanced, but you've got it. Okay, so if you're watching this one and you didn't watch the first one, maybe go back, check the first one out. I called that the basic accounting equation. It's around 5 minutes in length. Okay, so let me go ahead and pull up the iPad. So if you watch the first one, this is the basic accounting equation. Assets equals liabilities plus equity. Now, the way I define this stuff, very, very important to remember, and I'll just kind of write in some of my buzzwords. An asset is future material benefit. Okay? Liabilities are things that we owe. Now, equity, if you watched the first video, I kind of referred to it as the leftover or the difference, or in a financial accounting context, the book value. Okay? So has to balance out here, right? Has to balance out. And I'm actually kind of looking and I'm seeing that some of my stuff is a little bit off screen here. So I apologize for that. I'm just going to go ahead and drag it down so that there isn't any confusion. Let's just see how that does. Cool. So that's what we talked about. Okay. Now the reason I'm calling this the advanced version is because I'm going to go a little bit deeper into this equity section. Okay, now I'm going to put 4 pieces here, and I probably should do my my 4 lines this way, just so we don't get caught. So I'm going to go 1, 2, 3, 4. Okay, so the first thing I'm going to call it is capital. Now I'm going to give you all 4, and then I'm going to come back. So capital, I'm going to do dividends, I'm going to do revenue, and expense. Okay, so basic accounting equation. Assets equals liabilities plus equity. To me, I would say, well, what are the 4 pieces of equity? The 4 pieces of equity: capital, dividends, revenue, and expense. All right, now you're going, great. Yeah, I've heard those words before. Now I'm going to go a little bit deeper on this. So capital, we really have kind of 2 options. And this is a little bit more advanced, but what I'm going to do here is I'm going to put common stock, and I'm going to put retained earnings. And I don't want to lose anybody here. And shoot, I'm going off the screen again. Let me see if I can tighten this up a little bit, because this is important. Okay, I apologize for this. So here's capital. And what I had said there, let me go ahead and put these both back again. So what we're going to have is we're going to have stock, and we're going to have retained earnings. Now at a basic level, we don't even really need to worry too much about retained earnings yet, because I'm only getting you the basics of this. But what I want you to remember, this definition of capital, okay? What definition of capital is investment into business. Okay? So when we're talking about this, the first thing we got to kind of remember, and I'll squeeze it over here, we are doing the accounting for a business. Okay? We're doing the accounting for a business. So my definition of capital is going to be an investment into the business. Right? Capital, an investment into the business. Now let me just finish this off. I'll give you the definitions that I use for all of this. So dividends, the key words are going to be personal use. Okay, and what I mean by personal use, what I'm talking about here, I'm talking about by the shareholders. Right? I'm talking about by the shareholders, and I can see that's on top of my head. But dividends, personal use. Personal use. Revenue. Let's go ahead and finish this off. Revenue is good or service provided. Okay, good or service provided. And then the final thing we're going to talk about is expense, which I'm going to use costs used up or incurred to, and then I'm using an arrow here, okay, to generate revenue. Okay, so when we look at this basic accounting equation where I've expanded it, equity has 4 pieces: capital, dividends, revenue, expense. Now, if you're just learning this, it is super important that you memorize these basic definitions. Okay, so as you look at this, notice nowhere up here have I used the word cash. Nowhere. And it's a very common mistake people make when they're learning accounting, that they associate revenue with cash, right? Oh, we want to generate revenue. Don't do that. So when I say revenue, your mind goes good or service provided. Good or service provided. That's all it means. Okay? Expense. These are costs that are used up or incurred to generate revenue. Dividends. This is stuff that's personal use for the shareholders. Personal use for the shareholders. Capital is an investment into the business. Okay? Now, at this point, you're maybe going, you kind of had me, you lost me, I don't know where we're at here. But understand all of these definitions, right? So if I said to you, what's an asset? You guys would all say, that's something with material future benefit. Okay? What's a liability? Well, that's something that is owed. Right? Now, we have to think in the context of the business. But if you're getting this, where it gets exciting is if I give you an example of a business, you can get in the mindset of what's going on. So let's say a lawn care company. A lawn care company. Okay? What assets does a lawn care company probably have? What items of future material benefit does a lawn care company have? And you might go, well, gosh, they maybe have some cash or equipment or land or a building or maybe mulch, like supplies, inventory. All of that fits the definition of an asset, right? Items with future material benefit. Lawn care companies start thinking liabilities. I wonder who they owe. Well, maybe they owe some of their vendors. We'd call that accounts payable. Maybe they have a credit card and they owe a balance on the credit card. Maybe they have a loan on the lawnmower that they purchased. Well, that's a liability. Now notice the loan is the liability, not the lawnmower, because the lawnmower is an asset. All right? Capital and dividends I'll talk about in the next one, but revenue. If we're a lawn care company and I say to you revenue, you go, oh, good or service provided. I wonder what good or services a lawn care company provides. Well, they cut grass, they cut bushes, they do other stuff, but that's how they generate revenue. They provide the good or service that their business is designed around. Expenses. What costs are used up to generate revenue in our lawn care business? Well, advertising. We got to advertise. We use that up. Maybe supplies like garbage bags or garden gloves. Maybe gasoline, right? Gasoline, that gets used up. Okay, now, very careful with this. We can't confuse asset and expense. One has a future material benefit. The other one is used up, right? So if we have a gas tank full of lots and lots of gas sitting in the back of the shop, well, that's an asset. When we then use the gas, we take it out of the tank, then it becomes an expense, right? So where we get into this debate between asset and expense goes back to the definition of future material benefit. How material is it? You go to the gas station and you put gas in your car, well, yeah, that's going to benefit you in the future, but you're probably going to use it up pretty quick. So most often that will go right to expense because it's used up. Okay? So I don't want to, we could talk a lot on this, but I hope this is just useful. So basic accounting equation, you got to memorize it. Equity, I want you to think about the four pieces. You should be able to explain the definitions of each of them. So I'm going to do one more video where I get into how do we record stuff in accounting. And if these are at all useful, please let me know, because if not, I won't do them. Okay? Thanks, guys. Bye.